So I just uncovered another story which reveals $1.4 billion private equity loss again. A company is blown up. It's looking to reorganize, bankrupt, doesn't have the money to pay its obligations. Out of Bloomberg late yesterday, Wall Street firms Fortress, Ares faced total loss on portable toilet deal. Hope you guys enjoy my tongue-in-cheek thumbnail title today on the photo. Let me share the story with you and explain another new financial term to add to your vocabulary, and that'll be called continuation fund or continuation vehicle. You'll know what that is when I finish discussing it here for a few minutes. As I always humbly ask, if you're not subscribed, please subscribe to the channel and share the videos for me so we can keep growing the community. So the article says 3 Wall Street heavyweights are poised to suffer a total loss on a deal for a portable toilet company orchestrated by Platinum Equity. Remember last week I shared a video, and I'll link it at the end here, on a company called 4048 or 4840. It was a pallet company, and they went belly up as well, left the lenders holding the bag on a bunch of worthless assets. And I said, why is it that private equity and by extension, pension funds, life insurance companies, why are they in the business of owning a pallet company? Well, I guess they're also in the business of owning portable toilet companies as well that aren't doing too well. So the article says spotlights the hazards of a controversial strategy that gained traction across private equity. I'm going to share with you in a second what that strategy is. Fortress Investment, Ares Management, and Blackstone Inc. are among the money managers set to lose a combined $1.4 billion on United Site Services Inc. United Site Services Inc. as Platinum prepares to hand control of the company to lenders according to people with knowledge of the matter. So United Site Services Inc. Is a portable toilet company, right? They drop off and pick up porta potties, evidently. So it says the funds were among the anchor investors in a so-called continuation vehicle that Platinum created in 2021 to buy USS from another of its private equity funds. The deal valued USS at the time at $4 billion, allowing investors in the older fund to cash out $2.6 billion. But it also left the investors in the new vehicle, the continuation vehicle, with a concentrated bet on the portable toilet company, which was its sole asset. Okay, and now it's worth, basically, according to the article, zero. So what is a continuation fund? I saw on August 18th a story out of Bloomberg where they talk about continuation funds and their use in private equity. It's more gimmicky. It's gimmick stuff. It's more shifting the pawns around, moving money. So let me explain to you. Private equity firms collectively own thousands of companies, we've been discussing this for weeks on the show, that can't sell for a profit, right? They're zombie companies. Investors in private equity are getting impatient to see a return on their investments. Private equity's solution, the continuation fund, right? Saves the day. A continuation fund is an investment vehicle that enables a private equity firm to move one or more companies from an existing fund to a newly created fund. The transaction allows investors to either roll over their existing investment or put their investment into the new continuation fund. So either roll it over or cash out. Okay, well, investors that are getting nervous have no intention of, nor do they roll it over into the new vehicle, they pull their money out, okay? So whatever value there was under whatever cockamamie valuation scheme was applied or given to the company, in this case $4 billion, it sucks out the majority or lion's share of that value, leaving basically wasteland, right? It's a dumping ground into this continuation fund. Again, sorry for the tongue-in-cheek. Continuation funds have taken off as a way to keep the music going and generate cash for investors at a time when private equity funds have struggled to profitably sell companies in their portfolios in the public or private markets. Again, a lot of these deals were done in 2020, 2021, before the Fed started raising rates. And now what's happening is these companies are not generating any profits, and the borrowing costs are higher, liquidity is drying up, and so it is again, ticking time bomb. Few buyers envision when they do a deal that they'll be rolling it over again, and some transactions are encountering resistance from investors, right? No surprise there. There are concerns about whether the asset is really worth what the private equity firm is valuing it for, and whether there is a clear path to an eventual sale. Look at the show from a few days ago. We've got the big four accounting firms now getting in on not just auditing, but valuations, right? At the behest of the SEC, who has no idea what's going on with a lot of this stuff. So, but if the fund or asset says is carrying too much debt or is overvalued, it could end up sinking into bankruptcy. All right, so let me continue with what's going on with this toilet company. It's exactly what's going on. It says, after they created this continuation fund, right, the new investors got left with a concentrated bet on the toilet operation making money. The unraveling of USS stands as one of the most high-profile examples of how continuation vehicles, which give private equity firms the opportunity to monetize assets without an outright sale, can backfire. Always is structured as an opportunity, right, as if it's a good thing. The deals have exploded in popularity in recent years amid a slump in deal-making and a lackluster environment for initial public offerings, IPOs, the two main avenues for buyout funds to exit investments. Right? Nobody's going to go with an IPO if their company is failing. Okay, it just won't pencil out. So these things get stuck in these vehicles. The company is operating under so USS has been operating under a forbearance agreement with the lenders that's set to expire in early December. The people familiar with the matter said, well, a forbearance agreement is an agreement where the lender says, okay, you don't have to for now pay any of your loan, any of your interest, right? What they're doing with student loan payments, forbear, right? So forbearance agreement. So the company hasn't been even making its debt obligations, servicing its own debt. Okay, it's a zombie company. Continuation vehicles accounted for almost a fifth of exits for private asset managers in the first half of this year, according to an analysis by Jefferies Financial Group. All right, so how many dumping grounds are out there? This is one we're seeing explode now. Just wait for the wave, right, to happen. And it says that, to use the word wave, a wave of specialist firms raising money specifically for continuation funds has fueled a surge of transactions in recent years, adding new layers of complexity to how these deals are structured. And I would add how they're going to be unwound. They're not. They're going to end up in bankruptcy after bankruptcy after bankruptcy, with the lenders, right, the investors holding the bag. So at the time in 2021, when this continuation vehicle was formed and announced, with Fortress, Blackstone, and Landmark Partners, right, which has now become part of Ares as backers, the Platinum Company president, Louis Sampson, at the time described the toilet company transaction as the best of both worlds, saying in a press release that the deal gave both old and new investors the opportunity to profit from the company's growth prospects. And we all know now, 3 or 4 years later, there was no opportunity to profit. There were no growth prospects. It was pie in the sky. It was wishful thinking, and now the lenders are going to get basically zero. Company has struggled to live up to the COVID-era hype that a return to in-person events would be a boon for its business. Okay, whether it's portable toilets, whether it's pallets, whatever it is, they're always going to have a reason why the company didn't return to profitability, right? An out-of-court restructuring the company completed in 2024 failed to improve the picture, and after years of disappointing performance, due to difficulties in integrating a flurry of acquisitions, Platinum is close to a deal that will turn over the company to lenders. And the lenders in this case include Clearlake Capital and Searchlight Capital Partners, possibly through a bankruptcy filing. Listen to this. In 2021, when the deal was done, USS USS, the company, handled around 1 billion gallons of waste each year with over 360,000 portable restrooms. And now it's in bankruptcy court. The continuation fund is bust. The lenders are going to get stuck picking up the pieces. Thanks for watching the show today. If you enjoy the content, please leave me a like. If you're not subscribed, please subscribe. Leave your thoughts and comments. Don't forget your questions for the live stream Saturday. I'm going to select a question from each show. And with that being said, everybody have a fantastic Thanksgiving tomorrow, and I will talk to you all soon. Bye.